The day I stopped chasing money was the day trading finally made sense to me. And I don't mean the day I became rich. I don't mean the day I had a big win. I mean the day something inside my head quietly broke. The belief that money was the goal. The belief that this next trade had to pay me. The belief that the market owed me something because I needed it. For years, every time I sat in front of the chart, I wasn't really trading. I was hunting. I was chasing. I was trying to grab money out of the market like it was running away from me. Every candle felt personal. Every pullback felt like betrayal. Every loss felt like proof that I wasn't good enough. I told myself I was trading to grow an account. But if I'm being honest, I was trading to escape pressure. Bills, expectations, time. I wanted trading to fix my life fast, and that urgency was poisoning every decision I made. I would enter trades not because the setup was clean, but because I didn't want to miss out. I sized up not because the risk made sense, but because I wanted the win to matter. I moved stop losses not because the market changed, but because I couldn't emotionally accept being wrong. And the market punished me for that, not loudly, not dramatically, slowly, quietly, one bad habit at a time. What no one tells you is this: when you chase money, you stop seeing information. You stop seeing probabilities. You stop seeing structure. All you see is outcome, profit or loss, win or failure. And once your brain locks on outcome, discipline is gone. Because discipline only exists when the result doesn't control you. I remember one trade clearly. It was a textbook setup. Everything aligned. Trend level confirmation. But I had just taken 2 losses earlier that day, and instead of trading small and clean, I doubled my size. I told myself it was confidence. It wasn't. It was revenge wearing a mask. The trade went a little against me, not enough to invalidate the idea, just enough to make me uncomfortable. And instead of accepting that discomfort as part of the game, I panicked. I closed early. Minutes later, the market did exactly what I expected. Perfect move, clean profit. Without me, that moment hurt more than any loss. Because the setup was right, the analysis was right, but my mindset was wrong. That's when it hit me. I wasn't losing because I didn't know how to trade. I was losing because I needed the trade to pay me emotionally. And the market will never do that for you. The market doesn't know you exist. It doesn't know your account size. It doesn't care how badly you want this trade to work. It only offers opportunities, probabilities. That's it. The day I stopped chasing money was the day I stopped asking the market to validate me. I stopped asking it to make me feel smart. I stopped asking it to fix my past losses. I stopped asking it to give meaning to my effort. Instead, I started asking better questions. Is this trade worth taking regardless of outcome? Is the risk small enough that I won't care if I'm wrong? Can I execute this trade exactly the same way even if the last 5 trades were losses? That shift changed everything. I reduced my position size so much that it almost felt pointless. And that's when something strange happened. I became calm. I stopped staring at every tick. I stopped interfering. I stopped trying to control what couldn't be controlled. And for the first time, I actually followed my rules. Not because I forced myself, not because I was disciplined, but because there was no emotional pressure left. Most traders think they need more confidence. They don't. They need less attachment. Confidence doesn't come from winning trades. It comes from knowing that a loss doesn't matter, that you can take it and still be the same trader tomorrow. When money stopped being the goal, execution became easy. I stopped overtrading because there was no rush. I stopped chasing breakouts because missing a move didn't hurt anymore. I stopped moving stop losses because being wrong was acceptable. And that's the part beginners don't understand. Profitable trading is not about being right, it's about being okay with being wrong. The irony is brutal. The moment you no longer need the money, the market starts offering it more consistently. Not because the market changed. Because you did. Your edge didn't improve. Your indicators didn't magically work better. Your mindset stopped sabotaging you. I used to think professional traders were fearless. They're not. They're detached. They don't see money on the screen. They see risk units. They see probabilities playing out over hundreds of trades. They don't celebrate wins. They don't panic over losses. They execute. That's it. The day I stopped chasing money, I realized something uncomfortable. I had been using trading to avoid responsibility. I wanted the market to save me instead of doing the boring, patient work of consistency. But trading rewards patience, not urgency. It rewards humility, not ego. It rewards survival before growth. Once I accepted that my job was not to make money, but to follow rules, everything slowed down. And in that slowness, clarity appeared. I no longer needed every trade to work. I no longer needed today to be profitable. I no longer needed the market to prove anything. And that's when trading became simple. Not easy, simple. Because simplicity lives on the other side of acceptance. If you're watching this and you feel stuck, frustrated, emotional, constantly close to quitting, hear this clearly. There's nothing wrong with you. You are not broken. You are just still chasing money. And as long as you chase it, it will run. Stop trying to make trading change your life fast. Start trying to trade well for a long time. Trade small enough that losses don't touch your identity. Trade clean enough that wins don't inflate your ego. Trade consistently enough that results become boring. Because boring trading is professional trading. The day you stop chasing money is the day you finally give yourself a chance to make it. And until then, the market will keep teaching you the same lesson again, and again, and again. Not to punish you, but to show you that freedom in trading doesn't come from profit. It comes from acceptance. The chase that quietly destroyed me. The day I stopped chasing money didn't begin with clarity. It began with exhaustion. Not the kind of exhaustion that comes from hard work, but the deeper kind. The kind that sits in your chest. The kind that makes you stare at a chart and feel nothing but tension. The kind that tells you something is wrong even when you don't yet know what it is. For a long time, I thought trading was supposed to feel intense. I thought pressure was normal. I thought the anxiety before every trade meant I cared. I told myself that real traders feel adrenaline. That stress was part of the game. That if I wasn't emotionally invested, I wasn't taking it seriously. I was wrong. What I didn't realize back then was that I wasn't trading the market. I was trading my need, my urgency, my fear of staying where I was in life. Every time I opened a chart, I wasn't asking a professional question. I wasn't asking about probability or structure or risk. I was asking something much more dangerous. Can this trade change my situation? And that question poisoned everything. Because when a trade carries the weight of your future, it stops being a trade, it becomes a demand. And the market does not respond well to demands. I needed money. Not because I was greedy, but because I was tired. Tired of struggling. Tired of explaining why things weren't working yet. Tired of telling myself that next month would be better. So I chased breakouts that weren't clean. I chased entries that didn't fully form. I chased moves I didn't understand because they looked fast. And every time price moved, my emotions moved with it. When the market went in my direction, I felt relief, not confidence, relief, like I had escaped something. When it went against me, I felt panic, not analysis. Panic, like I was being dragged back into a life I didn't want. That's not trading, that's emotional bargaining. At the time, I didn't see it. I thought I was ambitious. I thought I was hungry. But hunger clouds judgment. Hunger makes you rush. Hunger makes you grab instead of wait. And the market punishes grabbing. I remember sitting through trades I had no business being in, watching price tick by tick, heart rate elevated, mind racing, telling myself stories to justify staying in. It will come back. It's just a pullback. I can't take another loss today. And when I finally exited, it wasn't because the setup failed. It was because I couldn't emotionally tolerate the uncertainty anymore. That's the trap most traders never recognize. They don't exit because the trade is wrong. They exit because the feeling is unbearable. And then they blame strategy, they change indicators, they change timeframes, they change mentors. But nothing changes because the problem isn't technical. It's psychological. The market doesn't know you need this trade to work. It doesn't know you promised yourself today would be different. It doesn't know you stayed up late studying. And even if it did, it wouldn't care. The market only does one thing. It expresses uncertainty through price movement. And if you are not at peace with uncertainty, you will suffer. What chasing money really does is this. It turns randomness into judgment. Every loss feels like a verdict. Every win feels like temporary permission to breathe. That's not a healthy relationship with trading. And it's not sustainable. I used to think I was losing because I wasn't smart enough. Because I didn't have enough experience. Because I hadn't found the right system yet. But slowly, painfully, I began to see the truth. I wasn't losing because I lacked knowledge. I was losing because I lacked acceptance. I hadn't accepted that losses are normal. I hadn't accepted that outcomes are random. I hadn't accepted that no trade owes me anything. So I fought reality. And whenever you fight reality, reality wins. Every time. The chase creates a dangerous illusion. The illusion that if you just try harder, you can force consistency. But effort does not create consistency in a probabilistic environment. Alignment does. When you chase money, you stop aligning with the nature of the market. You try to bend it toward your needs. That's why chasing traders overtrade. That's why they oversize. That's why they break rules they swore they would follow. Not because they are weak, but because they are emotionally overinvested. I look back now and I can see it clearly. My account didn't blow up in one dramatic moment. It eroded. Slowly, one impulsive decision at a time. One emotional adjustment at a time. One small betrayal of my rules at a time. Death by 1,000 cuts. And the worst part was this. I knew better. Intellectually, I knew better. I could explain risk management. I could explain probabilities. I could talk about discipline. But knowledge without emotional acceptance is useless. You don't trade what you know. You trade what you believe. And I believed that money would fix something inside me. That belief made every trade heavy. The day I stopped chasing money didn't happen because I suddenly became wise. It happened because I ran out of energy to keep lying to myself. I couldn't pretend anymore that the next trade would save me. I couldn't pretend that bigger size meant bigger confidence. I couldn't pretend that stress was normal. I reached a point where I asked a question that changed everything. What if trading is not supposed to feel like this? That question cracked the door open. Because the truth is, professional trading does not feel intense. It feels routine. It feels calm. It feels boring. Intensity is a sign of attachment. Attachment is a sign of need. Need is the enemy of objectivity. Chasing money turns the market into an emotional battlefield. And you cannot win a battle against uncertainty. The market doesn't need you to be aggressive. It needs you to be neutral. Neutral enough to accept a loss without reacting. Neutral enough to let a winner run without interfering. Neutral enough to execute the same behavior regardless of outcome. That neutrality was impossible as long as money was my focus. Because money was never just money to me. It was hope. It was escape. It was proof. And the market will never give you those things. The moment I saw that clearly, something inside me shifted. Not all at once, not dramatically, but enough to realize this. If I kept chasing money, trading would keep hurting me. If I wanted peace, I had to change the goal. That realization sets up everything that comes next. Because before you can talk about control, you have to accept that you don't have it. Before you can talk about consistency, you have to remove emotional pressure. Before you can trade like a professional, you have to stop trading like someone who needs to be saved. The chase ends when you understand this simple truth. The market is not the place to solve your life problems. It is a place to execute a process within uncertainty. And until that sinks in, no strategy will save you. This keynote is not about shame, it's about recognition. If you see yourself here, that doesn't mean you're failing. It means you're early in the real journey. Because every trader who eventually becomes consistent goes through this phase. The phase where money is the focus. The phase where outcomes feel personal. The phase where losses feel unbearable. The difference is not who experiences it. The difference is who learns from it. And the first lesson is always the same. You cannot chase money and see the market clearly at the same time. You have to choose. When you're ready, reply with the illusion of control. After I stopped chasing money, I thought the hardest part was over. I thought once I let go of the emotional attachment to profit, trading would automatically become easier, cleaner, more consistent. I was wrong again. Letting go of the chase exposed a deeper problem, one that had been hiding underneath everything, the illusion of control. For years, I believed that the more involved I was, the better trader I would be. I believed that watching every candle, managing every tick, adjusting every stop made me responsible, professional, in control. But what I was really doing was fighting uncertainty. And you cannot fight uncertainty without losing yourself in the process. Most traders don't realize this, but control is the most seductive addiction in trading. It feels productive, it feels smart, it feels safe. And it's completely false. I thought control meant reducing risk. I thought control meant managing trades actively. I thought control meant staying alert, focused, intense. But real control in trading doesn't work that way. Because here's the truth no one wants to accept. You have zero control over what any single trade will do. Zero. You don't control whether price moves. You don't control when volatility expands. You don't control when the market decides to invalidate your idea. And the moment you try to control what you cannot, stress enters the system. I used to sit in trades feeling tense, telling myself I was being disciplined. But discipline doesn't feel tense. Tension is a signal that you're emotionally exposed. Every time price moved against me, even by a few ticks, my mind reacted. Not logically, emotionally. What if this is the reversal? What if I'm wrong again? What if I didn't see something? That internal dialogue wasn't analysis. It was fear disguised as thinking. And fear always demands action. So I'd interfere. I'd close trades early to protect myself from feeling stupid. I'd tighten stops to feel safer. I'd skip valid setups after a loss because I didn't trust myself. And then I'd tell myself I was being cautious. I wasn't. I was being reactive. The illusion of control convinces traders that if they just manage better, they can avoid pain. But pain is not something you avoid in trading. It's something you accept as part of participation. The market is a probability machine, and probability includes loss. Always. When you don't accept that, you spend your entire trading career trying to eliminate uncertainty instead of learning how to function inside it. That's when I realized something critical. I didn't trust my edge. I didn't trust my rules. I didn't trust myself. And that lack of trust had nothing to do with my strategy. Trust comes from consistency of behavior, not outcomes. But I had it backwards. I was waiting for consistent outcomes before I allowed myself to trust the process. That day never comes. Because outcomes are random in the short term. This is where most traders get stuck for years. They say things like, once I start winning, I'll size up. Or, once I'm confident, I'll follow my rules. Or, once this strategy proves itself, I'll stop interfering. That logic is upside down. You don't earn control by winning. You earn control by accepting that you don't have it. The turning point for me came when I stopped asking the wrong question. I used to ask, will this trade work? That question created anxiety every single time. I replaced it with a different question. Can I execute this trade correctly, regardless of outcome? That question changed my relationship with trading. Because execution is the only thing you control. You control your entry rules. You control your position size. You control your stop placement. You control whether you follow your plan. Everything else is noise. When I truly accepted that, the urge to interfere weakened. Not because I became stronger, but because interference lost its purpose. There was nothing left to protect. Losses stopped feeling like threats. Wins stopped feeling like validation. Both became neutral. That neutrality is what professionals live in. Professional traders are not calmer because they are better people. They are calmer because they don't expect certainty from an uncertain environment. They don't try to predict. They don't try to force. They don't try to control. They participate. The illusion of control also shows up in how traders think about information. I used to believe that more information meant better decisions, more indicators, more confirmations, more opinions. But what I was really doing was searching for certainty. And certainty does not exist in trading. Every additional indicator didn't make me safer. It made me slower, more hesitant, more conflicted, because conflicting information creates hesitation, and hesitation creates missed trades or late entries. The market rewards decisiveness based on rules, not certainty based on information. The moment you accept that no setup is guaranteed, decision-making becomes easier. You stop asking, is this perfect? You start asking, does this meet my criteria? That distinction is everything. The illusion of control also feeds ego in subtle ways. When traders interfere with trades and occasionally save themselves from a loss, they reinforce the belief that their interference works. They remember the times it helped and forget the times it hurt. That selective memory builds false confidence. But over time, interference always costs more than it saves, because it breaks consistency. And consistency is the only thing that smooths randomness. One of the hardest moments for me was realizing that many of my losses weren't caused by bad trades. They were caused by bad reactions. I would enter correctly and exit incorrectly. I would size appropriately and then panic. I would plan logically and execute emotionally, and then I'd blame the market. But the market didn't do anything wrong. I did, accepting that was uncomfortable. But it was necessary, because growth in trading does not come from adding skills. It comes from removing illusions. The illusion that you can control outcomes. The illusion that effort guarantees reward. The illusion that being smart protects you from randomness. Once those illusions fall away, something surprising happens. Trading becomes quiet. Not exciting, not dramatic, quiet. And in that quiet, you start to see clearly. You see that losses don't threaten you. You see that wins don't define you. You see that your job is not to predict, but to execute. That's when trading shifts from emotional survival to professional participation. The illusion of control is seductive because it makes you feel responsible. But responsibility in trading does not mean controlling results. It means controlling behavior. You are responsible for following your rules. You are responsible for managing risk. You are responsible for protecting capital. You are not responsible for whether the market rewards you today. That responsibility belongs to probability over time. Once I accepted that, I stopped babysitting trades. I stopped micromanaging outcomes. I stopped trying to be right. And something strange happened. My results stabilized. Not because I got smarter. Not because the market changed, but because I stopped interfering with my own edge. This keynote exists for one reason. To show you that if trading feels stressful, intense, or overwhelming, it's not because you're bad at trading. It's because you are still trying to control what cannot be controlled. And until you let that go, consistency will always feel just out of reach. In the next keynote, we go even deeper. Because accepting uncertainty is not enough. You also have to remove emotional consequence. And that only happens one way. By trading small enough that being wrong no longer hurts. Trading small is what finally gave me freedom. The idea of trading small used to offend me. It felt like an insult to my effort. Like admitting I wasn't good enough yet. Like slowing down when I desperately wanted speed. I told myself that trading small was for beginners, for people who didn't believe in themselves, for people who were afraid. What I didn't realize was that my resistance to trading small had nothing to do with confidence. It had everything to do with ego. Because ego wants results now. Ego wants proof. Ego wants validation. And trading small threatens all of that. I used to believe that if I didn't feel pressure, the trade didn't matter. That if the position size wasn't big enough to hurt, it wasn't worth taking. I confused emotional intensity with importance. That belief nearly destroyed my trading career. When you trade big relative to your account, every decision becomes heavy. Every tick matters. Every fluctuation feels personal. And once a trade feels personal, objectivity is gone. I wasn't trading setups anymore. I was trading my self-image. If the trade worked, I felt smart. If it failed, I felt exposed. That emotional swing is exhausting, and it's unsustainable. The first time I deliberately reduced my position size, it felt wrong. Almost pointless. The potential profit looked insignificant. The risk felt laughably small. And that's exactly why it worked. For the first time, I could sit in a trade without feeling watched by my own expectations. I could let price move without reacting. I could allow the trade to breathe. Because nothing was at stake emotionally. That's when I understood something that most traders never truly grasp. Discipline is not a personality trait. Discipline is a side effect of low emotional risk. I didn't suddenly become a disciplined trader. I simply removed the emotional reason to be undisciplined. When the outcome of a trade doesn't matter to your identity, your behavior changes automatically. You stop checking the chart every minute. You stop interfering with stops. You stop hoping and fearing. You just execute. This is where most traders get confused. They try to force discipline while still trading sizes that emotionally overwhelm them. That's like trying to stay calm in a burning building by telling yourself to relax. It doesn't work. The environment has to change. Trading small changes the environment inside your mind. Losses stop hurting, wins stop exciting, everything evens out. And that emotional neutrality is the gateway to consistency. I remember thinking, how am I supposed to grow my account trading this small? That question misses the point. You don't grow accounts by trading big. You grow accounts by surviving long enough to let probability work. Professional traders don't think in terms of single trades. They think in terms of series, hundreds of trades. Thousands. They understand that their edge only expresses itself over time. But time only works in your favor if you stay in the game. Trading small is how you stay in the game. It's not about being conservative. It's about being realistic. The market doesn't reward bravery. It rewards consistency. And consistency requires emotional stability. When I traded smaller, something else happened that surprised me. I started seeing the market more clearly. Because fear was no longer distorting my perception. I could wait for clean setups without feeling impatient. I could skip trades without feeling like I missed something. I could accept losses without needing to make them back. My decision-making improved, not because my analysis got better, but because my emotions stopped interfering. This is the paradox of trading. The less you need a trade to work, the better you trade it. Most traders never experience this because they are obsessed with making money instead of building behavior. They ask, how much can I make? Instead of, how consistently can I execute? The second question is the only one that matters. Trading small also exposes uncomfortable truths. It shows you whether you actually have an edge. It shows you whether your rules make sense. It shows you whether your discipline is real or forced. When size is large, emotion masks flaws. When size is small, clarity appears. And clarity is what you need to improve. There's another reason traders resist trading small. It removes the fantasy. The fantasy that one good trade will change everything. The fantasy that a big win will erase past mistakes. The fantasy that success comes in dramatic moments. Professional trading is boring, repetitive, predictable, and that boredom is not a flaw. It's a feature. Boredom means you're no longer gambling emotionally. Boredom means you're no longer chasing. Boredom means you're finally aligned with probability. When trading became boring for me, I knew something had shifted. I wasn't emotionally invested in outcomes anymore. I wasn't counting money mid-trade. I wasn't imagining what the profit would mean. I was just executing a process. That process didn't make me rich overnight. It did something far more important. It gave me control over myself, and self-control is the only control you will ever have in trading. The traders you admire are not fearless. They are emotionally insulated. They have removed the connection between outcome and identity. They don't feel smart when they win. They don't feel stupid when they lose. They feel neutral. Trading small is how you build that neutrality. Not forever. Not as a limitation, but as a foundation. You don't lift heavy weight before learning form. You don't race before learning balance. And you don't trade big before learning emotional stability. When traders skip this step, they spend years stuck in cycles of hope and frustration. When they embrace it, progress accelerates. The irony is painful. The moment you stop trying to make money, you finally create the conditions to make it. Because money is a byproduct of consistency. Consistency is a byproduct of emotional safety. Emotional safety is created by trading small. That's the chain, and once you see it, you can't unsee it. In the final keynote, everything comes together. Because trading small is not the end goal. Acceptance is. Acceptance of uncertainty. Acceptance of randomness. Acceptance of yourself as a participant, not a controller. That acceptance is the real edge. Acceptance is the real edge. The final shift didn't come with excitement. There was no big winning streak, no dramatic turnaround, no moment where I felt like I had finally made it. What came instead was something much quieter. Acceptance. And at first it felt like giving up. I used to believe acceptance meant lowering standards, settling, becoming passive, letting the market push me around. I thought if I accepted uncertainty, I would lose my edge. The truth was the opposite. Acceptance didn't make me weaker, it made me honest. Acceptance meant I stopped arguing with reality. I stopped arguing with losses. I stopped arguing with randomness. I stopped arguing with the fact that no matter how good I was, the next trade could still lose. And when that argument ended, the internal conflict ended with it. Most traders don't realize how much energy they waste fighting what cannot be changed. They fight losing trades instead of accepting them. They fight drawdowns instead of planning for them. They fight uncertainty instead of building systems around it. That constant resistance creates stress, and stress destroys clarity. The market is uncertain by nature. That is not a flaw. That is the source of opportunity. If outcomes were guaranteed, there would be no edge. If certainty existed, there would be no reward. Acceptance is not resignation, it is alignment. When I truly accepted that any trade could lose, something surprising happened. Losses stopped shocking me. Wins stopped exciting me. Results stopped defining me. And that emotional neutrality changed my behavior in ways I never expected. I stopped overtrading because there was no urgency. I stopped forcing setups because I wasn't afraid of missing out. I stopped chasing because I trusted the process over time. This is where consistency is born, not from intelligence, not from confidence, but from emotional stability. Most traders think confidence comes first and acceptance follows. In reality, acceptance comes first and confidence grows quietly from it. Confidence is not believing you will win. Confidence is knowing you will be okay if you lose. That's the difference. Once I accepted that my job was not to make money, but to execute a process, the pressure disappeared. I no longer woke up needing the market to give me something. I no longer sat at my screen demanding results. I no longer judged my day by profit or loss. I judged it by one thing only. Did I follow my rules? That single shift simplified everything. A losing day with perfect execution felt like success. A winning day with poor execution felt like failure. That reversal is the mark of a professional mindset, because professionals measure themselves by behavior, not outcome. Acceptance also changed how I viewed time. I stopped thinking in days and weeks. I started thinking in months and years. Short-term randomness stopped mattering because it no longer threatened my identity. I understood that consistency is not visible in small samples. It emerges over large ones, and large samples require patience. Patience is impossible when you are emotionally invested in immediate results. Acceptance gives you patience. The traders who never make it are not lacking intelligence. They are lacking acceptance. They secretly believe they should win more than they lose. They secretly believe the market should reward effort. They secretly believe losses mean something is wrong with them. Those beliefs create suffering. Acceptance dissolves them. Losses become expected. Drawdowns become manageable. Winning streaks become temporary. Everything finds its proper place. That's when trading becomes simple. Not easy, simple. Simple rules, simple execution, simple risk, and a calm mind. I used to think profitable traders were special, smarter, faster, more talented. They're not. They're just no longer at war with uncertainty. They've stopped asking the market to be predictable. They've stopped asking trading to fix their life. They've stopped asking wins to define their worth. And in that space, clarity lives. The day I stopped chasing money, I stopped chasing validation. The day I stopped trying to control outcomes, I gained control over myself. The day I accepted uncertainty, consistency became possible. This is the paradox every trader must face. You don't win by trying harder. You win by resisting less. You don't profit by forcing results. You profit by aligning behavior with probability. Acceptance is not the end of ambition. It is the foundation of it. Because once you accept reality as it is, you can finally work with it instead of against it. If you're listening to this and you feel stuck, frustrated, or exhausted, understand this clearly. There is nothing wrong with you. You are not broken. You are not incapable. You are not missing some secret strategy. You are simply still fighting something that cannot be defeated. The market. Stop fighting it. Accept uncertainty. Protect capital. Trade small. Execute cleanly. Let time do the heavy lifting. That's how consistency is built. Quietly, slowly, inevitably, and that is the real edge.